G'day and welcome to the Morgans Edward Street Weekly Wrap. Today is the 8th of December as we look to edge closer to the silly season and on to Christmas. Summer has well and truly set in here in Brizzy, but unfortunately the mercury was the only thing rising as the ASX 200 had 3 down days out of the 4 so far this week. To tell you more, I'll pass you over to Matthew for his macro view, but firstly please note that our comments are general in nature and please speak to your Edward Street advisor if you wish to know if any of the following stock recommendations suit your personal needs and objectives. Matt?
Thanks Cam, good intro. It's been one of the busiest periods I can remember, with several deals being served up to us each day and lots of IPOs aiming to list prior to Christmas. It almost goes without saying these days that the US market again had another great month with one of the longest bull markets I think I've ever seen. Clearly all the praise, if you can call it that, goes to Donald Trump and his recent corporate tax cuts gaining clearance in the Senate. US markets have rallied strongly as a result, and even the prospect of higher interest rates has not slowed them down. It's hard to predict what will finally break the trend, and for now I probably still wouldn't be going against that trend either. On our market, in comparison, also found support in November rising around 100 points, but yet still toying with the 6,000 level, as Cameron mentioned earlier, as investors initially started to take profits around that level. I've mentioned seasonally that we are approaching a real sweet spot for markets, which I find is normally excellent for investing between Christmas and the first 2 weeks of January. You're probably asking yourself, why is that? Well, all of a sudden hedge fund traders generally like to close their short positions to finish off the busy period and take a break, and as a result, the market tends to rise on low volumes and less shorting. History certainly doesn't always repeat, but it usually rhymes as well. So what's taking my attention this week? Amazon has finally hit our shores and everyone is scratching their heads wondering what is all the fuss about. From what I read, a lot of items are actually dearer than some of our major retailers. As a result, we have seen a bit of sell the rumour and buy the fact play out with the likes of JB Hi-Fi, Harvey Norman, and many other Amazon affected stocks starting to bounce again now there is more certainty in the space. Outside of retail, I've noticed the telco space finally starting to move higher. The chart on your screen shows the performance of each sector since the start of the year, and thanks mainly to Telstra, the telco space is horribly underperforming. However, this appears to be turning, with Telstra receiving a few upgrades from a couple of brokers this week, making its way above $3.60, and TPG Telecom also making headlines post its AGM on Wednesday, confirming guidance. There appears to be a lot more certainty in the space nowadays, with the NBN seeming more and more likely to be a nightmare for taxpayers, and any move to write down $30 billion invested will act as a big catalyst supporting the space, as the providers will achieve lower access rates and therefore higher margins. Thanks, Cam.
Today I'll be providing the buy idea for the week, which is stock which hasn't seen too many friends over the past 24 months. That is Brambles, ticker BXB. Put simply, Brambles provides 590 million pallets, crates and containers through its brands. This company has a market cap of $16 billion whilst generating its revenue from over 50 international countries. With its international earnings, we see Brambles as a beneficiary to the lower Aussie dollar, whereby our analyst has used a 77-cent assumption against the greenback. Brambles is supported by strong fundamentals with a return of equity of 20%, fair EPS growth projected, and a healthy dividend of 4%. Brambles in its first quarter of 2018 exceeded many analysts' expectations, and we believe it can continue to do the same over the next 12 months. This ASX 20 listed stock operates in the industrial sector, which in my view is a difficult space to find value given the headwinds and threats of rising interest rates. On Morgan's forecast, we have lowering debt position over the coming years, which should help support the company in all market environments, and I'm happy accumulating at the current price of $10.24. Over to you, Matt.
Well, that again wraps up another edition of Morgan's Edward Street Weekly Wrap. This will be the last edition for the year for me personally, so I'd like to take the time and opportunity to thank all the clients for their continued support and wish you a safe and Merry Christmas. And the boys will see you again next week for their final edition for 2017. Thank you.